Welcome back. As you experienced with your homework in the previous lessons, you already know how to buy or sell when you have an edge in your favor. Simply identifying the areas of support and resistance gives you enough of an edge to take winning trades. The stochastic oscillator by itself not only helps you to identify overbought and oversold areas, but it also provides you with three different trading signals: divergence, coming out of the overbought, oversold areas, and crossing between the two lines of the stochastic. Your edge has been growing, and now it is time to combine the different stochastic signals with the support and resistance areas identified in the previous lesson and homework. This way you will increase exponentially the probabilities in your favor. Let's take an example. This is the same chart we used for our examples before. You probably remember we traced this line here to identify this as a potential resistance, and we discovered that soon thereafter it turned into support right here. When it was penetrated, it now turned into support. It went to the next area of resistance, and when it came back to that support. Now, what happens if when it came back to support, just by having identified this, we would have put a buy order here? But what if we can verify that buy order with the stochastics? And look, the stochastic has already penetrated the oversold area right where it hits the support area. So now we have this signal here that is telling us probably it's going to find support there, and then the stochastic lines cross. You see how the red crossed the blue? So now we have a second signal there, or a third signal there. And to make it better, now it crosses the line of the 20, so it climbs above that, giving us a perfect buying signal, because we know that this area was one of those areas where there are different buyers for different reasons that you now understand that are interested in buying around here. So that gave us the possibility of taking a very nice winning trade. Notice now, for instance, how here we got to the next area of resistance, and that area coincides right here with the stochastic being in an overbought area, and on top of that it has crossed not once but twice, and on top of that it penetrates the area of the 80 in the downwards direction. So again, this is a good opportunity to sell. But is that what we want to do? Well, we know that this is going to go to support, right? We had that area of support identified before. Remember that right here it was resistance, now resistance here, and now it turned into support because it was penetrated. So now right here is support. So we expect that once that we reach resistance here, it comes back to that area and we'll find support there. Now let's see, is a stochastic going to give us a signal? Well, right here it didn't. It had not yet penetrated the area of oversold, so we wouldn't buy there. The stochastic continues, giving us now the possibility of buying here. Why? Well, because it crossed, it's moving in the direction of the 20 line and is penetrating it, and on top of that, well, it's in the area of the previous support that we were expecting. So now we can combine all those signals and have again a beautiful buying signal that allow us to write this up to here. Well, we continue. Now we went up here and we reach an area in which actually to the tick it reached the area of resistance right there. When it hit that, Well, now we have several other indications. Now it hit that while the stochastic was not confirming that high. So stochastic was coming down as the price was going up, giving us some negative divergence. And that negative divergence occurs precisely to the tick on that area of resistance that we had identified. So that has to be a sell. It had to be, and it had to be a good one. And indeed, it turned into a major sell. Now notice here we had the same situation. We were expecting it to come to the next area of support, which would have been here, but it penetrated it, so we would have thought, well, then it goes to the next area of support, which would have been right here. Well, it goes there, but it goes there producing an important divergence here that we identified as positive divergence. So it produces that divergence, it crosses, it penetrates the 20 line. Well, that gives us a beautiful buying opportunity again, and this buying opportunity goes really high. Now notice how the markets start coming down and it goes to the next support area. Amazingly enough, right? This support area that we had identified here as resistance, and support here, well, now is support here again. But right here, well, it's not really a good opportunity to buy, is it? So even though it gets there, we would be thinking, but should I buy? And we look at a stochastic and then we go like, well, stochastic did not penetrate the area of oversold and climb back up. So this may not be my best opportunity. So I'm not going to buy here. So we let this opportunity pass by because it wasn't precisely the most ideal one. Now the market continues. It goes back to the area of resistance. Now right here is in oversold area. Overbought area, I'm sorry. So that gives us the possibility that if they cross, we could sell. If they penetrate this, we could have a second verification, but we don't. So we don't sell there either. So we wait until it continues. It reaches again the area of resistance, but it does it with an important divergence that we identify like negative divergence. And that in itself, together with being in a resistance area, give us enough evidence as to sell it, and so forth and so on. So now, developing this will probably take you several days before you become very skillful at identifying these ideal trading setups. Of course, in order to do that, you have to have made your homework and be able to identify the support and resistance areas, being able to identify the stochastics trading setups and the divergences, the crossings, the penetrations of the 80 or 20 lines, etc. So to speed up the process, I recommend that you visit the tab Ninja Trading Videos to learn how to use Ninja's market replay feature, so you are able to practice as much as possible even during the weekends or holidays when the markets are closed. So you can practice and practice these setups and send them to us for corrections and observations. But remember, there are lots of materials that we must cover in the next 2 weeks, so practice as much as possible so you grasp all these concepts and make them yours. Next time on TMT, candle patterns that you can trade.